Hello everyone, I'm Marty and welcome to our June 2021 market update. I'm really excited to be here again. Thank you for joining us. We're getting very close to 200 subscribers on YouTube. This is super exciting and a relatively new experience for me personally. This is my third social media event for the day. I've had a lot of clients asking for the June update. We just got all the stats in, so we're going to jump right into it and bring you guys up to date. Thanks for joining us today. Very good. So again, just to recap for those new viewers, we follow the metric of the sales ratio, which is basically the absorption rate of product into the market every month. The balance determines the price fluctuations. So if less than 11% of the product is sold every month, it's a buyer's market. There's downward pressure on pricing. If between 12 and 20% sales ratio or absorption rate, we're in a balanced market. It doesn't favor the buyers or the sellers. But if it's greater than 21%, we're in a seller's market. There's upward pressure on pricing, and that's the market you want to sell in, and it's favoring the sellers. Okay, so let's pop right into the market speedo video. Let's see what's happening right now. There is definitely talk about the market calming over the recent months and that there's going to be a balancing. My forecast is a little bit stronger than that. But the sales ratio today for Metro Vancouver is 33%, so a very good number. Still in a seller's market, still upward pressure on pricing because we're over 21%. So again, in summary, year over year, number of listings are up from this time last year. The number of sales are also up from the previous year, and the sale prices overall, year-over-year variance up 16% in Metro Vancouver. Interestingly enough, I've started a little table here on the right-hand side. You can see for Metro Vancouver, the sales ratio last month was 42%. We're down to 33%. The peak of the year so far was in April at 55%. Okay? Here's the table that I like to put together, really show us what's going on in detail. The sales activity year over year for detached houses is up 166%. Still tremendous activity compared to this time last year. The benchmark price for detached homes up 23% from this time last year. And since last month, we had another climb in detached houses in Metro Vancouver of 1.7%. Attached townhomes and half duplexes, activity year over year is up 168%. The benchmark price is up 16% year over year. Since last month, attached townhomes and half duplexes are up 1.8%. Let's look at apartment condos. So activity year over year up 213%. The pricing from this time last year up 8%. And since last month, apartment condos have appreciated by 1.2%. Really interesting stats you'll see over the last month compared to the previous month. We've got lots of happy sellers out there that are taking advantage of this market. But let's look at what's happening in a bit more of a deep dive. We've got our four market drivers. There's hundreds of factors driving our real estate market, but four primary main factors. Number one, is money still cheap? Well, the newly introduced mortgage stress test that reduces the maximum borrowing amounts by approximately 4.5%, and the average 5-year mortgage rates climbing over that 2% mark are indeed impacting the cheap money factor. So that's becoming less of a prominent figure in driving our market. Next factor, savings are up. Well, remember, over last year, Canadians saved $75 billion, but they've been on a big spending spree. People are spending money like crazy, not only on real estate, but on sporting goods, on anything they can get their hands on. Suppliers are having trouble keeping up. That's good for our retailers. But is the $75 billion being spent? I'd be curious to see what that figure is today, but certainly people have more disposable income, so that's still a factor. Also, still the main factor driving our market is the demand for more space. Every home we're selling, people are asking, What kind of outdoor space is there? Is there a private yard? How is this laid out for us to be able to work from home, enjoy our home more? And that demand is still there and still one of the primary drivers in our market. And last but not least, supply being low. Throughout last year, the supply levels were low. They never climbed dramatically, but we are seeing the inventory levels climb back in all product levels gradually, and some steepening, and I'll dive deeper into that a little bit later on in my market update. So the supply is being impacted, the cheap money is being impacted, the money's starting to be spent more and more. I don't know how much is left, but this main driver for more space is still there. So as the pressure is easing off, these factors are beginning to weaken. We're having to work very hard to get the activity on the listings that we're getting now, to get these multiple offer results and get the kind of sale prices that we are still getting for everything from our virtual tours to our live stream broadcasts. We've already done 2 of them today, are very well watched. Look at this one on 3rd. We had 20,800 viewers. On 15th, we had 24,000 views of that live stream. The 3D plans, all these extras that we're doing in the marketing is certainly helping bringing people out, but we're having to work especially hard now with these weakening factors. So let's see what's hot and what's not in our market. Again, we're looking at the sales ratio. We're looking for ratios that are over 21% for a seller's market. What's happening in all the product categories? Very first, detached houses on the west side, down to 16%. Now, if you look at the history, last month was 22%, still a seller's market. We have now dipped in to a balanced market for west side houses. Interesting. Look at the peak month again in April at 28%. So detached houses, the upward pressure on pricing has now disappeared into a balanced market, not favoring the sellers or the buyers. Popping into condos and townhomes on the west side, still at a very strong 39%. So there's definitely good upward pressure on condos and townhomes on the west side still. Last month was at 40%, so not a dramatic change in the sales ratio from April until June. And in April, you can also see our peak month at 46%. That was our real peak of the sales ratio and activity in our market. So that's condos, townhomes, west side. Let's pop into condos, townhomes, downtown, which we separate out. 29%, still a very solid and strong seller's market. Good upward pressure. Again, the peak month this year has been April again, when it was at 51%. So you can see the strength of the market when it was back in April and where we are now. Again, still a seller's market. Detached houses in the east side, still in a seller's market at 28%, very respectable seller's market, and upward pressure on pricing still, but you can see compared to our April peak of 53%, you can see that's starting to ease off for detached houses on the Vancouver east side. Condos and townhomes on the east side, we got the highest sales ratio, still very hot in the east side for attached product at 49%. But again, go back and look at the historic figures that I've been tracking. April was at 84%, which was ridiculous amount of pressure on the limited supply that was there. So again, what's happening is our inventory is increasing. The demand is staying a little bit the same and easing off. So you've got a little bit of the shift in the balance for the pricing. Again, our hottest product still attached strata product on the east side at 49%. Now, what's happening in the burbs? This is very interesting. Detached month-to-month variances. We're seeing a drop in the sales ratios throughout Greater Vancouver, except for Coquitlam, Pitt Meadows, Cloverdale, and New Westminster had increases in the sales ratio. So what's happening is you've got these outlying areas in the suburbs with still affordable housing, and everybody's swarming to those locations. where we are getting more and more activity for this affordable housing, and you can see that in the attached product in the east side. That's carrying on out into the burbs. And if we look at, and that's detached, if we look at attached month to month, same trend. We're seeing drop in the sales ratio in all the Metro Vancouver neighborhoods, and as you get further out, Tsawwassen, Surrey, Cloverdale, Pitt Meadows, Port Coquitlam, and Mission have actually increased their sales ratio, so they actually got hotter since last month. Very interesting to note. So what's next? What's in for the forecast? Where are things going? I like to look at the consumer confidence being impacted by COVID-19 cases being reported. I've got the whole historic graph of how it went through the year. You can see that peak we had just in January and the new cases as they peaked in April. We've got a nice downward slope taking place. That's getting people excited. Most of the people I know have had their first shot, including our daughter who's 18, so she has been vaccinated. The hospitalization rates as well, you can see when COVID began, and then the peak again in the new year, you can see has dropped off substantially as well. So the program seems to be working. Everything's looking pretty positive from a pandemic point of view. We are in phase 4. That's encouraging, and in fact they're even starting some of the second vaccines for people. This is all good news. Something though that I've read recently that I thought you might find interesting, 90% or else. There's a lot of research going into this, including an SFU mathematician who specializes in infectious disease modeling. She says that unless we get 90% of the population vaccinated, it's not going to work, and we're going to get a fourth phase of the pandemic, which is not something anyone wants, starting in September and peaking in November and December. And that's only if the majority of us don't get vaccinated. So for any of your friends that are holding off, get them out there. We need to hit that 90% to keep this curve out of the forecast. There's my plug for vaccinations. So what's happening now in our economy? We've got economic activity versus the trend. You can see we dropped down in the beginning of the pandemic, but the economic activity has just skyrocketed. So what does this mean? How does that impact us? It's good for consumer confidence, but it also impacts interest rates. There's pressure, upward pressure on the interest rates when our economy does well. So that's going to be a factor that's going to be increasing the interest rates. The other factor, again, going back to our 4 main drivers in the market, the inventory. Look at houses west side. From December, you can see a gradual and now a steeper climb in the number of homes for sale on the west side detached. There's now 725, and then we were starting at about 367, so almost double the number of homes on the west side today than there was in December of last year. If we're looking at condos, townhomes, you can see the same but a little bit lesser trend, up to 873 units back in December from 611. So we're getting an increase in inventory there. Mind you, not as steep as the detached. Houses east side, however, that's where we're seeing the most dramatic increase, a low of 133 homes for sale on the east side in December, up to 669 homes for sale now on the east side. So again, one of those 4 drivers in our market, being inventory levels, is being dramatically impacted. We no longer have low inventory levels and product available. That's going to affect the balance in pricing as well. The sales to actives ratio for all product, townhomes, condos, detached, have all hit that peak back in April and are beginning their descent down. Homes for sale by region, you can see throughout Vancouver Island, the Okanagan, Kootenays, Lower Mainland here, Northern BC have all hit that peak back in April, and the number of homes sold in each region is dropping now as well. And you can also see, this is one of my favorite graphs from the beginning of time in 1977. There's our Nelson Scalbania days in 80-81 when we had 20% interest rates, and the increase in the average pricing of detached in blue, attached townhome in red, and apartment condos in green. You can see that climb we've had since the onset of COVID, when the market really opened up. But you can also see a little notch at the top where it's turned around and slightly dropped. So the billion-dollar question, is this just a little blip and it's going to continue, or is this the beginning of one of these downward trends? Nobody can tell the future. My forecast is it's the beginning of one of these downward trends, but again, we'll go into more detail. At the beginning of the year, as you recall, I forecast prices going up 15% this year. Here's what's happened so far. We're at 14%. We're seeing that pressure ease off in the market. I might be pretty well bang on in that estimate. I think we're definitely going to hit at least 15%, maybe slightly above, for price appreciation from January 1st. I've also predicted about a 20 to 35% adjustment in pricing downwards in our market. There's going to be a few factors that impact that. Of course, the vaccine rollout campaign, the government tax changes, how aggressive are they going to be to try and get that $1 trillion back that they've spent? And of course, the government stimulus package, how many billions of dollars are they going to put into the economy to help stimulate it and carry us through any challenging periods now that we're entering into that end of the pandemic phase, even though the end might just be in a different form that we're all comfortable or aware of. So again, the possible market forecast that I started from the beginning of the year, of course, is the high pent-up demand is certainly there. The pent-up savings, that's being spent. The vaccine program in full swing, that's certainly helping drive the market. The interest rates are low but changing and starting to climb. The economy is booming. All of that transfers into our peak activity market, the federal budget, where we've had that price increase up to here. And interestingly enough, when I came out with this graph in the beginning of the year, I just randomly chose July as that June, July as the peak of our market before things start to change. We're seeing mortgage rates beginning to climb, and that's going to increase with that increase in the economic activity. They are connected. The inventory levels are increasing. Well, that's happening. You saw the data there. There's going to be a federal election at some point. That's the big secret of the year. But after that, there's probably going to be some new tax measures. Again, there's only one way for the government to get that $1 trillion back, and that's through some additional tax measures. And the pandemic assistance programs will end, and then the sellers wanting to take advantage of that market before it changes too much will begin to start listing en masse. Buyers will start holding back and purchasing, and you will start to see that adjustment in pricing taking place, where you're getting that rise in inflation, the increased interest rates, and the rising tax rates potentially. Hopefully not, but likely. So that's the forecast that we're sort of projecting, and that is my market update for June. I hope you enjoyed that. Thank you for subscribing. I'm really excited to hit that 200 subscriber mark. Please tell your friends. Also happy to answer any questions. I know many of you have been emailing me and answering questions. There's my email again. Happy to answer any questions you might have in our market. And subscribe to, of course, our YouTube page. You can like us on Facebook for your notifications. And I wanted to thank you for joining us. Again, it's a beautiful day here in Vancouver. We're so lucky. Went for a beautiful row this morning. Might go for a swim tonight. How lucky are we to live in this city? Stay safe, everyone. Get your vaccines. We'll see you in the next update.